Let's now quickly revise applicability of accounting standards, which is chapter 3 from your syllabus. The references to accounting standards is given in Companies Act 2013, and this is what mandates preparation of financial statements in compliance with accounting standards. Firstly, section 129, which talks about financial statements, subsection 1 to this section says that whenever a company prepares financial statements, it should be in accordance with accounting standards. Section 129, subsection 5 tells that for a company, when an accounting standard is applicable, if it does not follow that accounting standard, if there is any deviation, it has to very clearly mention such deviation from accounting standards. Same is also mentioned in accounting standard 1. Then let's talk about section 133. Section 133 is the list of accounting standards that is notified which a company should follow. It is notified by NFRA, National Financial Reporting Authority. Then we'll talk about the director's responsibility in preparation of financial statements and auditor's responsibility. Director's responsibility is given in section 134. Section 134 subsection 5 talks about director's responsibility statement. Under that, clause A tells us that director's responsibility statement, it is mandatory for the directors to say that they have fulfilled their responsibility of preparation of financial statement in compliance with accounting standards applicable to them. Further, under section 143, when the auditor releases its duties and responsibilities, an auditor under subsection 3 to 143 and then clause E, he has to ensure that financial statements which is auditing is in compliance with accounting standards. If not, he has to mention in his report such deviation. He has to qualify his opinion also if in fact the accounting standards are not followed by the entity. For the purpose of checking applicability of accounting standards, we need to remember that there are two governing bodies. One is MCA, Ministry of Corporate Affairs, or NFRA. That is as per Companies Act. The second aspect is ICI, Institute of Chartered Accountants of India. All the corporates, that is companies, are regulated by NFRA provisions, that is Companies Act provisions. However, all the non-corporate entities are regulated by ICI, Institute of Chartered Accountants of India. As per MCA's notification, the classification of business enterprises is into two categories. One, small and medium company. Second one, not small and medium company. SMC and non-SMC is what we call. However, as per ICI, it is classified into four categories. Level 1, Level 2, Level 3 and Level 4. Level 1 under ICI and non-SMC as per Companies Act classification are same. SMC classification as per Companies Act is divided into three sub-classifications by ICI, that is Level 2, Level 3 as well as Level. Why do we basically classify these business enterprises into non-SMC and SMC or into level 1, 2, 3, 4? Because if it is a non-SMC, that is, it's not a small company, meaning it's a big company, all the accounting standards are applicable. Out of 32 accounting standards, 30, 31, 32 are removed, 8 and 6 have been withdrawn. So, remaining 27 accounting standards are applicable completely to a non-SMC, that is to a large company. Meaning, for a level 1 enterprise, as per ICA classification, all the accounting standards are applicable. If you are not a non-SMC, that is, you are an SMC, certain accounting standards are not applicable to you. Certain accounting standards are relaxed. Not applicable means you don't have to follow that accounting standard. Accounting standard 17, segment reporting. Relaxation means that accounting standard is applicable, but certain paragraphs of that accounting standard need not be followed by you. For example, 15, 19, 20, 28 and 29. That's the exhaustive list of accounting standards against which there is relaxation to a small company. However, with regard to level 2, level 3, level 4 companies also, the list is given here. What standards are not applicable, what standards are applicable partly. Meaning where is there an exemption and where is there a relaxation. You don't have to mug these up. As and when you read a standard in your syllabus, check whether that specific standard is applicable to all forms of entities or only certain classes of entities. Then we'll go ahead and then see how do we tell whether an entity is SMC or non-SMC. How do we tell whether an entity is level 1, level 2, level 3 or level 4? Right now, there are two different tables, two different classifications. I put all of them together to prepare one master chart. Using this, you will understand in entirety. First, we'll see only non-SMC and SMC. This is classification as per Companies Act. There are only two classifications, non-SMC and SMC. This is as per Companies Act. Non-SMC means big company. SMC means small and medium company. Your company is listed or in the process of listing, shares or debentures, whether in India or outside India, your company is not a small company. It is non-SMC. Let me repeat. Your company is listed whether in India or outside India. shares or debentures, then it is non-SMC. It is not a small company. If it is not listed, yes, if it is not listed, it's debenture. It's not listed in India. It's not listed outside India. It is not even in the process of getting listed. Then it is eligible to become SMC. It is not SMC. Why? We need to check other conditions. Second condition is about business, what the company does. If the company is doing the business of banking, including cooperative banks, it is doing NBFC business, it's doing insurance business, or it is any other financial institution, then it cannot be called as SMC. It will be non-SMC. In order to be called SMC, it should not be doing banking, it should not be cooperative bank, it should not be NBFC, it should not be financial institution, it should not be doing insurance business. Then you are subject to other two conditions based on borrowing and turnover. And lastly, the holding criteria to be decided as SMC. Then we'll check the turnover. Turnover of the company, if it is greater than 250 crores, then you are obviously not a small company. If it is 250 or less than 250, then you are eligible to be called as an SMC subject to other conditions. What if it's exact 250? I told you, if it is 250 or less than 250, it is eligible to be called as a small company. And turnover, when we say, we see the last year's turnover. And this is revenue from operations, including other income in your P&L. Then we'll talk about borrowing. If you're borrowing at any point of time during the year, it is greater than 50 crores, then you are not a small company anymore. You are a large company, non-SMC. If it is equal to 50 or less than 50, then you can be called as a small company subject to other conditions. Last point is, if your holding company is not a small company, you are also not a small company. If your subsidiary company is not a small company, you are also not a small company. Why? If you have a holding or subsidiary, you have to do consolidation. To do consolidation, accounting policies and accounting standards followed should be same. If you are not following certain accounting standards, if your holding company is following certain accounting standards, it is difficult for consolidation. So if your holding company is not a small company, though you fall in the criteria of small company, you will be called as not a small company, and all accounting standards are applicable to you without any relaxation, without any exemption. This is as per Companies Act. Then let's talk about ICI. Level 1, 2, 3, 4. Level 1 is same. That is non-SMC. Not listed, not in the process of listing, whether shares or debentures, whether India or outside India. Not doing banking business, not doing cooperative business, not an NBFC, not a financial institution, not an insurance company. And turnover is turnover is more than 250 crores. And borrowings more than 50 crores, and your holding company is level 1 enterprise, then you are level 1 enterprise. If you are listed or in the process of listing, if you're doing banking, NBFC, financial institution, or insurance business, or your turnover is greater than 250, or your borrowings is greater than 50, or your holding company is level 1 entity, then you are a level 1 entity. However, in order to be level 2, level 3, level 4, that is MSME, my medium company, small company, or micro company, should not be listed, should not be in the process of listing, whether shares or debentures, whether India or outside India. You should not be doing banking business, you should not be doing NBFC, you should not be insurance company, you should not be financial institution. It comes down to turnover, borrowing, and who's your holding or subsidiary company. If your turnover is 50 or less than 50, but more than 10, you are level 2. If it is 50 or less than 50 crores, more than 10, you are level 2 enterprise. If it is 10 or less than 10, but greater than 2, level 3 enterprise. Lesser than 2, level 4. Turnover, it is not more than 250. If it is more than 250 or level 1, it is 250 or less than 250, but it is greater than 50, then it is level 2. If it is 50 or less than 50, but greater than 10, level 3. If it is less than 10 or equal to 10, you are level 4 enterprise. Lastly, we should check your holding company. If your holding company or subsidiary company is level 2, even if you are level 3 or level 4, you will become level 2. If your holding company is level 3, you are level 4, you become level 3. You will only go up the ladder. You are level 2 enterprise. Your holding company is level 3. Will you become level 3? No. Your holding company will become level 2. That's a very weird scenario, not possible, but it's only way upward. And this is how you check whether accounting standards are applicable to your company or not. If it is applicable, are there any exemptions or are there any relaxations based on the level in which you belong? Got it? Good.